because of the ETF.
Well, we're not allowed to, but yeah. We're a passive holder of Aphria, but we're a significant holder of Aphria, and we're going to continue to be a significant holder of Aphria. You know, whether this transaction actually gets completed or not is a big question.
They're talking about the transaction right
there's
now.
a lot of underlying discussion on what's going on with Aphria right now, and you have these negative short seller reports out there, but there is positive news like this, even with their potential linkage between GGB and Aphria. This is a bona fide bid, and it is at a price higher in the marketplace where the stock is trading right now.
Exactly.
And just so that our viewers are fully aware, your Horizon ETF, you have a cannabis ETF.
Yeah.
And so that's why you own a number of stocks within the cannabis industry.
So this is the
Horizon
ETF.
Marijuana Life Sciences Index
ETF. The CEO of the HMMJ
the largest ETF in Canada, the first marijuana ETF in the world.
And they own a lot of Aphria.
It's a $800 million fund, and we own a significant stake in Aphria itself, but as a passive
they own a big stake in Aphria.
What's your outlook then for the cannabis industry in 2019, particularly going back to what you said in terms of we're actually really going to get some real numbers from these companies after legalization?
Yes, real revenues coming.
All the companies right now are preparing their Q4 statements. These are all public companies, and I think they're all going into a quiet period with respect to talking about their financial results, and it's going to be very interesting to see where the true sales numbers are. Like the ones that have come out already have been very positive, and are giving us a nice forecast on what this market could look like in 2019 for this, again, young emerging sector. So, we're going to see some companies falling short of their expected financial results, and we're going to see those as key takeover targets if they have assets there that they're big.
See, this is exactly what I've been saying. The companies that don't hit their targets will be taken over, and all the big boys will be left standing. shit, you guys couldn't hear me? I'm so sorry. That's fucked up. I had the volume off. Shit. Sorry, guys. That's my bad. That's my bad. I had the volume off. That's retarded. So you guys totally missed that whole thing. Fuck.
In just 2 days, a comprehensive and progressive agreement for Trans-Pacific Partnership
Sorry, man.
will take effect for the first 6 countries that have ratified the deal. Let's get those details right now from Tara Weber, who's joining us from Calgary. Tara, let's talk a little bit about this Sunday's tariff cut. Could quickly be followed by another. That's right. Sunday's the big day, and then the second one's coming in on Tuesday.
So you guys missed the whole conversation. I was listening to BNN Bloomberg, and the CEO of BNN Bloomberg was saying that all these cannabis stocks are hitting a bottom, and that's why they're jumping right now. Sea of red where? Sea of red where? Where's their sea of red? The Dow? Yeah, it's been up and down. TRUL? Plus 125. What do you mean? Oh, 12%. Nice. T-God's up 16%. Nice. Nice. Keep bringing the picks, man. Keep bringing the picks.
Going to be one big way to do it. And let's talk about the benefit to some of the sectors here as well. It's going to benefit a number of them. But let's talk about the auto sector. They have not been quite as happy. No, there has been a lot of concern there, and this is just because they're really disregarding what the federal government is saying, that it's going to open up this highly coveted area, Japan in particular.
Do I think that T-God will go back to $3? I think T-God's going to go to like $10.
And so there's also been some concern about how this is going to work with or complement the new NAFTA deal.
We know this.
Because there's different parameters.
We know where T-God's going. It's got the word God in it. T-God. T-God. Hell yeah, it's going to go up. Hell yeah, it's going to go up. AGRU up 27%. Yo! Let's go! Acreage. Told you guys Acreage was a beast, man. Told you. Buying the red, selling the green, buy low, sell high. When everybody's crying, that's when you're buying. That's the rich system, and it works.
Opening up the Canadian market to some of the cheaper produce.
Sorry you guys missed some of those conversations in the cannabis sector, man. I didn't realize that my volume was turned off. I had my phone turned sideways, and the volume was on the side, and it turned it off. Sorry about that. Technical difficulties, guys. This is why you don't drive and record and go live. There's a lot of things going on at the same time here. I'm trying to focus on the road. That's why my phone keeps bouncing.
Thank you. And staying with the trade file, coming up next, the Minister Justin Trudeau is doubling down on the trade file as we enter a key election year.
T-God's going way higher than $3. Way higher than $3. Way higher. I could see T-God at $7 easily.
As we enter the home stretch of 2018, it's the perfect time to visit the team.
Happy New Year's to everybody. Wish you guys all a blessed 2019 and beyond. APHA is up 11%. CanTrust up 8%. Yo, thank you for the picks, guys.
Take advantage of a $1,500 cash rebate. Don't miss out on the great offers available on an incredible selection.
Everything's moving, man.
Mazda vehicles during the Mazda year-end event.
I should set up Streamlabs? What's that? Yo, I love you guys, man. Happy New Year to all you guys, man. Wish you guys all the best in 2019 and beyond, man. We're gonna get it. We're gonna get it. We're going up. No one can stop us. We're already up.
The board says Western Canadian oil production outpaced pipeline capacity by 202,000 barrels every day in September.
Sorry, guys.
Says if you take into account pipelines that were down for maintenance, that number ballooned to 365,000 barrels daily. Airport puts official numbers on our crude oversupply commissioned by Ottawa. It comes as Alberta's temporary mandated.
There we go. There we go. We're back. We're back.
The TSX is is up 155 points. While the
TSX
Dow
is up.
Jumping by 200. Gold's flat on
Dow
the day,
is
while
jumping
oil
by
is higher
200.
at $45.38 per barrel. And the loonie is down at 73.35
What's with the loonie?
cents US.
The loonie just keeps falling.
From BNM Bloomberg.
The hell?
My name is Dad. Well, actually,
Canadian loonies sucks.
I'm just Wi-Fi fixer guy. Because in our house, any glitch, lag, or hiccup is...
Even crap Bombardier is up 6%. Yeah.
We switched to D-Link's whole home mesh Wi-Fi system. Now we enjoy up to 5,000
Oh my goodness. What else is popping, guys? How about that VTVT we were looking at earlier? Is it still popping? VTVT. It was popping earlier, like 150%. Bombardier up 6%. Nice. Yeah, Juju looks like a dud, man. It does.
Have been a relative outperformer in 2018. In fact, in green territory, up 3.2% year to date. For where healthcare goes from here, we're now joined by the Chief Investment Officer at Harvest Portfolio Group. That's Paul McDonald. He manages an ETF that
Who's on fire?
Sector. Paul, good to see you and catch up with you. Thanks for coming in.
It's great to be here. Thanks for having me.
So it is just so interesting when you take a look at the markets, particularly in the United States, that healthcare has been the outperformer. Healthcare utilities, essentially, and you manage one of these funds.
That's right. Healthcare in particular, you know, we've been pounding the table for several years. We continue to do so. You know, it's one of the few sectors that have great short, medium, and long-term structurally positive dynamics, but it also has that defensive characteristic. So not dissimilar in 2008 when you look, it was down like the market, but it was the best performing subsector, and we're certainly seeing that in this environment here as we approach sort of the later stage of the cycle.
So when we take a look at your healthcare ETF, what
healthcare ETF,
the healthcare ETF?
Interesting.
So we have 20 large cap healthcare companies diversified across the sector.
Yeah, NTAR's been doing well, man.
Own across all our funds.
I ain't ignoring you, bro.
Companies in
I ain't ignoring you, man.
Whether it's healthcare or technology.
I ain't ignoring nobody.
Leading top 20 companies.
That's in your head, bro.
Really,
nobody's
again,
ignoring anybody.
Pharmaceuticals, biotechnology.
No, I'm not ignoring anybody. NTAR, good pick, man. It's been doing well. Respect on that pick, Pistol Pete. Respect. People are taking the profits. Well, yeah. When you see things go up, you got to sell it. Yeah, NTR's made a nice run, man. Good work. Good pick on that one. What other picks? What other picks? Anything else that we need to look at? Anything else that's moving? I heard MJNA was moving. Come on, man. Like, what the fuck? You know how to fucking drive? What are you doing? Jeez. What's wrong with these people, man? Weekend drivers. They only go come out on the weekends. Just like stop in the middle of the road. Like, who does that? Like, come on, man. Let's see what the CEO's talking about.
Make sure you're diversified, in particular in healthcare.
NTAR was at 25 cents a month ago, at $1 today. Very nice. I like that. I like that. TNY? Yeah, is that Tinley Beverage Company? They've been doing really well too.
The line is getting a little bit blurred as pharmaceuticals are shifting into biological drugs, which tend to have less patent expiry worries associated with them. They're much more complex. You do have medical devices, so ranging head, shoulders, knees, and toes, and the heart in between, so to speak. So from our perspective, when we look at the various subsectors, given this pullback, medtech still is trading at the upper end of the valuations, and their fundamental valuation metrics are a bit more expensive. We would suggest the pharmaceuticals, even some of the large cap biotech. We do need a catalyst for the biotech, but they're certainly very inexpensive right now.
What's the cycle looking like though right now for the pharmaceutical companies? Because if you get them at the wrong side of the cycle, I mean, these stocks won't do anything for a very long time. Whether it's there's not enough in the pipeline or there's patent expiration. So where are the pharmaceuticals these days?
That's a great question, because when we came through sort of the
pharmaceuticals are getting into cannabis. That's where they are. They're all getting into cannabis. Mark my words.
Multiples compressed meaningfully. In fact, Pfizer got down to a 6 times forward multiple as some of its key drugs were coming off patent. We see that actually today in some of the large cap biotechs like a Celgene. So what we see now, though, is we're very much in inning 7 of potentially a very long game associated with
Vivo's up 24%. Yo,
huge amount of catalysts coming.
You know I love my Vivo.
And we expect that.
You know I love me some Vivo.
And bleeding into the third quarter next year, huge amount of
cap balance, man, coming from the bottom.
Not just from
stocks
the
coming from the bottom.
It really is evolutionary. So we think that we're still very much.
There's nothing surprising there.
That
good companies will always go up long term. They might go down in the short term, but long term they're going to go up.
Yeah, so we do cover that company. We don't own it, and so they do have a, in their devices and equipment that they manufacture, also have an industrial component. So we do want to focus in more on the pure play companies that are exposed to the healthcare space. I don't have the numbers off the top of my head, but they would be considered one of the medical technology companies.
And where do you stand from a overriding concern that I've still had in terms of putting new money to work in some of the pharmaceutical companies?
Yo, guys, there's 22 minutes till the market closes. What's popping? Maybe GGB should buy Vivo. Yeah, that's a good point. It's a very good point. I don't know if Vivo's for sale, but GGB's trying to go after Aphria because they're one of the biggest, right? So I don't know if they're interested in Vivo at this point. I don't know if that's a target on their watch list, but you never know. Vivo's a good company too, with a lot of money in the bank, so it's very possible.
Transparency to the drug pricing. So let's find out who's getting what component of the middleman. So you're seeing a lot of these. What
drove markets today? What changed? I think it's the Aphria deal. I think it's the Aphria deal. Whenever you got news, whenever you got momentum in the sector, whenever you got people that want to buy out other people, it creates interest, it creates excitement, it gets people talking. And like I said yesterday, I said Aphria, this deal with Aphria is going to drive the sector up. It's going to make the sector green. And we're green. I've been around long enough to just kind of know. You start to get a feel for these things. You don't always know. Sometimes the market's going to do the opposite of what you think, obviously. Clearly, that's happened a lot too. But good companies are going to go up over time. So when they've gone down as badly as they have over the last couple months, you know at some point they're going to climb back up. And I think that this is just an example of that. We've hit a bottom. So we're starting, I told you guys we're bottom hunters. We hit a bottom, we're starting to see it climb. Yeah, there's going to be a lot of mergers in 2019.
Having said that,
it's going to be the year of the merger because all these small companies are going to get acquired.
Now that you would say, you know what, it's going to get worse before it gets better. I'm not going to step in.
I was there to worry about.
Is it going to be the
Why are we worrying? We're investors, man.
Is it going to be the insurance company?
If you are the type of person that worries, you probably shouldn't be investing. Investments go up and down, and it's not for the faint of heart, eh? Probably not the place for a worrier or a panicker. That's why I made these songs, Don't Panic and Cannabis Stocks Resurrection, because I know where we're going. And I already told you guys, nobody can stop us. We're already up. We're already up. We can't be stopped.
They do more than just everybody has an argument for their value add in the process, but certainly bringing some transparency there. I think that bodes well for your pharmaceutical and biopharmaceutical producers.
And just lastly, Paul, I don't know if
ACB is too big to get bought by another marijuana company.
That's right.
Can you give us an update in terms of that news, or is it?
You never know.
Down 12% on the negative news.
You never know.
Something like that.
That's right. This is the second time we've talked.
Canopy could buy them.
Legal disputes.
Canopy has enough money to buy them.
It fell about the same amount earlier in the year.
So
it does
anything is possible.
Johnson & Johnson, world largest diversified.
And if you get like $8 billion company, $1 billion pharmaceutical company could buy them any day. So nobody's too big to be purchased. Nobody's too big to get purchased, in my opinion. Not at this point. These companies are still so new. Imagine if Mickey D's bought ACB and then they would have cannabis at McDonald's. I don't know how that'll go over with all the kids.
trading at around 14 times.
Yeah, Coke could easily buy a lot of these companies. Absolutely. Coke has a lot of money.
Thank you very much.
Thanks for having me.
Thank you. That's an area that portfolio group. Meanwhile, Prime Minister Justin Trudeau is doubling down on the trade file as he heads into a key election year.
Different meaning to Happy Meals.
Bloomberg was standing by for us at the very latest.
McWeed fries.
He wrote a report today about this trade deal kicking off. Let's have a look on Canada exports for 2019.
Yeah, so Canada will fire out of the gate here with...
Yo, man, I'm getting into a bad frequency location here. Yo, guys, we got 17 minutes until the close. Is there anything else that we need to talk about right now before the close? We got 17 minutes. I'm going to stay live with you guys. I'm just driving. I'm going to be driving for a while. So... Who bought Eve up? What? Sorry, I missed that. What happened with Eve? Yo, these drivers are killing me, man. These drivers are killing me. Weekend drivers. Afraid of the rain. You bought way too high? Well, I would either be patient or I would buy more to lower my cost. That's the only way to deal with that. Or you take an L. You think it's interesting that a US company such as GGB is trying to buy a Canadian producer? I have a feeling we might see more US consolidation moves into the Canadian space. Well, think about it this way. In America, you can only work in America. But if you acquire a company like Aphria, now you're working in America, Canada, and internationally, because Aphria is already international. So by them trying to acquire Aphria, it's allowing them to essentially go global. But Aphria already said that's not going to happen. So I'm not surprised. Obviously, they think they're worth more. Their price would go higher if they just dealt with their short trader report from Hindenburg Research and all the short traders that are coming after them. They'd be doing much better. And they wouldn't be getting bought out for only 2.8 million. Or they wouldn't have a buyout offer for 2.8 million, which is a lowball offer. But it's the best offer they're going to get right now based on the fact that they haven't responded to the accusations of scandal and fraud, which is a big accusation. And they haven't even responded yet. So, you know, it is what it is.
Blow that growth rate in what is the biggest export market.
Okay.
Growing export market, I should say.
Understood. Just good to be with you. Thank you.
15 minutes till the close, people.
It, as we know, has been a very volatile end to the trading year in the North American equity markets. And interestingly, we're actually now seeing the Dow down 123, S&P in negative territory as well. The TSX...
Dow was only down 123. That's not even that bad, considering it was down like 500-600 points like an hour ago.
This is BNN Bloomberg Radio on 1410 AM.
Now this update from the Canadian press. New Brunswick's former premier has announced that he is stepping down as party leader earlier than planned. Frank Lance says he will resign at the Liberals' next caucus meeting, adding that while he will stay on as an MLA for the immediate future, he will not be running in the next provincial election. Two Ontario University professors being sued for defamation by controversial professor Jordan Peterson say a former teaching assistant who recorded the conversation in question is responsible for its broader publication. The pair, who teach at Wilfrid Laurier University in Waterloo, Ontario,
14 minutes till the close.
About Peterson were not defamatory, but they also argue in a third-party claim that they could not have known the statements would be recorded and disseminated outside the 2017 meeting. And the 36-year-old coach and general manager of the Humboldt Broncos has announced that he is stepping down. Nathan Oystrick was hired just months after the bus crash that killed 16 people associated with the team, including the coach, Darcy Hogan.
That's
From the Canadian Press, I'm Rob Westgate. This Saturday, Able Auctions will sell to the highest bidder a 1950 Chevrolet Bel Air.
13 minutes till the close.
Appliances, tools, a John Deere lawn tractor.
Your boy Rich is just doing some holiday shopping. Making sure I'm loaded with supplies.
For information on this auction,
here in the ride, just driving coast to coast across Van City. From one side of the city to the other, man. We're doing this for you, the people, live. We're listening to Bloomberg Radio Live.
Call the homies, wake your baby in the morning.
Now with Toyota Safety Sense, with payments as low as $38.
Happy holidays, everybody.
Because Toyotathon is almost
big weekend of football.
Today, just across the bridge in Maple Ridge, online at westcoasttoyota.com.
A couple more weeks, you're gonna see your boy, and I'll be on the beach. I'll be doing these live streams from the beach, yo. 12 minutes till the close. 12 minutes.
And now down, heading into this closing.
Yo, Oxley's been on fire, man.
Read on the markets right now for that. We're joined by Dan Deming. He's the managing director of KKM Financial. Dan, what a day! My goodness, and you just have to show the chart. But tell us from your perspective, what's actually going on?
Yeah, you know, I think, Catherine, what's going on here is we have some repositioning as we head out of this year and into early 2019.
Repositioning,
there was a big talk that a big pension player came in and drove the market higher late in the day yesterday. I think we're continuing to see that evolve today. You know, we saw a buy program kick in here at midday, but then selling pressure enter the market just in the last half hour. So, you know, you've got just a lot of moving parts, just some repositioning. Thinner markets right now, so I think you're seeing these moves being exacerbated by the fact that if we do have any reallocations, that it does have a tendency to push the market one direction or the other.
You know, and also, of course, volumes are on the lighter side. But, Dan, let's go back to the pension fund that was supposedly in the market and rebalancing their portfolio. What was the chit-chat around that? I mean, obviously it was a large pension fund. What do you think that they're setting themselves up for in 2019? Any word on that?
You know, I think there's no official word on that, Catherine, but I think at the same time, I think you had a fair amount of some players here, particularly in the last 6 months, who were sitting out this run-up. You know, I can tell you that, you know, we had some cash on the sidelines as well, and I was not thinking, you know, too fondly of myself earlier this year. But now there's some opportunities here, and I think that's possibly
people are buying the dips, man. People are buying the dips.
We saw some money flowing into the market that possibly was either positioned in bonds.
A lot of people were selling for tax loss season.
Going to be deployed at some point, and they felt pretty good about the fact that they could deploy it at some discounted levels. So I think that's part of the driving force. Also, you just have so much volatility and so many moving parts right now that historically, when you do get these types of sell-offs, you know, there is a tendency, well, certainly beneficial to allocate at times a duress like this. And so I think that's another part of the reason why maybe we're seeing, you know, at least some foundation here temporarily as we roll into 2019.
And as we roll into 2019, Dan, we've got one more trading day.
One more trading day, guys. In 2018, one more day.
Or any kind of word in terms of the sectors that might work. Everybody's talking about
one more trading day.
January and the first part of the year being quite tough.
Monday's the last trading day of the year. 10 minutes left.
Similar.
10 minutes till the close.
That right now that you are seeing,
I'm rushing home.
The idea that if we see some stability, I think the volatility in this marketplace is at extreme levels right now. There's no question about it. You pointed out intraday, when you look at the intraday moves, you know, significant volatility and the uncertainties. But at the same time, that does create some opportunities here. And the market's very, you know, pessimistic at this point. So I think that's part of the reason why you're seeing, you know, some of these initiations, and I think potentially we'll see further initiations in January. Because number one, because I mean, the economy is still pretty strong, and if you look at the
economy is strong. We're not going through a recession.
So we've actually seen it widen. So
there ain't no recession.
You hear the talk of, you know,
definitely no recession in Canada.
Types of, you know, thought processes. There's still a possibility, but you know, you're seeing some shifting parts here now that maybe taking that off the table a little bit, or at least playing for the reduced probability of something like that happening. And if that's the case, then you would think that equity would be at a value point here that could be compelling. So I think that's part of the reason why, Catherine. But you're still got a strong economy. Employment's still strong.
Growth looks good. We got earnings kicking off on January 14th. I think that could be the next catalyst for this market. But overall, you know, I think the diversification is key here, depending on the length of your investment horizon. And I think that's why you're seeing just some repositioning into some of the different areas moving into 2019.
And, you know, not to be so myopic as to look at the last tick in the market, but I do want to understand what turned this market. I mean, at the top of my show, the Dow up over 200 points. Any word in terms of what happened?
It's just a war.
Nothing that I'm hearing,
it's a war.
That can be definitive.
Market goes up and down, down and up.
We did have a significant run, though, off of those lows, Catherine. And yesterday's reversal alone, you know, it just felt like we went from oversold to overbought in the period of about 48 hours. And actually, I was a little surprised that after we saw the front up this morning in the opening, when we did see some selling pressure, that the market was able to resurrect itself. And I guess apparently there was still a little bit more buying here to take place throughout, you know, the afternoon. Now I think you're seeing that buying drying up. We're going into a holiday weekend. You know, Monday is open for business, but again, I think a lot of the repositioning is taking place today. And I think that's part of the reason why you're seeing possibilities of momentum players here, Catherine, who participated in the last day or so, now maybe showing up positions because they don't want to have to deal with it on Monday.
Understood. All right, Dan, we got to leave it there. Great to see you. Thanks so much for joining us, and Happy New Year.
7 minutes till the close.
Happy New Year to you.
Thanks.
Happy New Year to everybody. Love you guys.
Financial. Coming up next, we're going to get you up to speed on the end of the trading day just before the closing bell. You're watching CNN.
We got 7 minutes until the close. So, I'm just driving here in beautiful British Columbia in the rain. In a couple weeks, I will be on the beach. I will be at my Dominican villa for 2.5 weeks. Can't wait. I wish I was there right now. Before I go, I will be doing a lot of videos, so don't worry. I will keep you guys up to date on everything that's happening while I'm here and when I'm gone. And when I'm gone and when I'm on the beach, I'll be doing more travel videos, but I'll still be doing stock videos, don't worry. But I gotta do some travel videos because the reason why I invest is so I can travel. That's why I invest. So it's important to show those things that I do because it's a big part of my life. So work hard, play hard, man. The reason why I invest is so I can win, and then when I win, then I travel. I love to travel. I literally live to travel. That's just me.
With a beautiful infinity display or LG G7 Infinity with an incredible
honestly love to find the winners, help the people make money, and then take that money that we win and take that money that we make and invest in myself. I love to do that. It's the reason why I do it. It's the reason why I invest. Otherwise, why even invest? The reason why we invest is so our money can make us money. That's why we invest.
Sometimes you need a little.
So for me, you know, when you invest, you should set goals for yourself. What do you want? You want a car? You want to pay for your education? You want to buy a house? You want extra cash flow? Set a goal for yourself. For me, when I make money, I sell, I go on vacations. It's what I do. It's what I always do. It's what I've always done. It's what I will always do. Either going to be using that money to buy property, more stock, or go on vacation. If you know me, you know those are the only things I'm spending my money on. I'm pretty disciplined. I'm a very disciplined investor. And obviously I spend money on my kids. Other than that, first, I ain't got no girl to spend it on. I'm going to try to keep it that way because those girls are expensive. Especially when you go through divorce and then you get cut in half. You get chopped in half. Yeah, that hurts, man. Wouldn't advise anyone to do it. Mind you, you don't get married thinking you're going to get divorced. I promise you that. It's definitely not on your mind when you're getting married.
Points at around 3 o'clock, as you can see. That was the high of the day. But we've certainly seen some lows as well, down by about 150 points now, 122 to the downside. So just off the lows right now. But certainly a very choppy market. There's a lot of uncertainty.
Very choppy market.
We've had a huge run-up over the past couple of half happened in history.
Wow.
So essentially, one of the reasons perhaps why we saw the market move higher is because we had an oversold position by about 20% peak to trough. We actually saw 20% declines peak to trough. So on the back of
Is there anything else moving right now, guys? 3 minutes until the close. 3 minutes until the close.
So we're going to take a quick break and just see where these markets close out when we come back.
We are listening to Bloomberg Radio. Man, they got a lot of commercials, eh? Bloomberg Radio, they making money, man. They got lots of commercials. So if you want to be an analyst with Rich TV Live, you can be an analyst anywhere in the world. Anytime there's any breaking news, you can come on my show. And what we're trying to do is we want to be like Bloomberg, where we have analysts all over the world and we can talk about stocks and trending topics all over the world live in real time. That's the goal. 2019 is going to be a huge year, man. In 2018, we went from nobody knew who we were. Now we're on the map. We may just be a dot on the map, but we're on the map. So 2019, we're going to make some moves, I promise you. We ain't going to just be on the map.
And the loonie is falling to 73.25 cents.
The loonie keeps falling.
I'm Michelle Zedican from BNN Bloomberg.
Come on.
A lot can happen in just 20 minutes. Just think about a whole period of hockey. But this season,
the loonie keeps falling. That ain't cool, man. HEXO up 11%. Nice. HIP is up 4 cents today. Nice. All the pennies are moving. All the big boards and all the pennies are moving. 2 minutes. 2 minutes. Here we go. Here we go. 2 minutes. We're at the close. I'm showing you guys how I find my information.
Did you know you can save money by using dish soap to clean grease?
I'm showing you guys where I find my tools, where I find my information, where I find my education. I use different tools like Bloomberg Radio. I show you guys all my tools, man. I'm not here to hoard my tools and be like, if you want my picks, pay me. Pay me. Give me money. Give me your money so I can give you my picks. No, man. I ain't about that. I'm about making money with you, the people.
All right, welcome back.
Here we go.
Quick look here at the closing bells. TSX holding on to the gains.
Hold on, TSX. Hold on to your gains.
Points, though. We are seeing strength in energy shares as well as financials and also industrials today. But we did see materials a little bit weaker. As we look at the NASDAQ, a bit of fluctuation there in terms of positive and negative territory today. Still a bit of pressure on some of those tech companies. But do keep in mind we've had a nice run-up over the past couple of trading days, really stemming from the Dow moving up 1,000 points as we take you to the New York Stock Exchange closing bells. We were up by over 200 points at 3 o'clock, and we've also been seeing some negative movement just over the past 20 minutes or so to look to end in negative territory for the day. So very look at the after-hours section.
We are in after hours now. The market is closed. Ding, 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 ding.
All right, we'll take a look at where the markets did end the session with the Dow down by 77 points. And again, as I said, we were up over 200 points at the 3 o'clock time period. NASDAQ is barely holding on to some gains. The TSX, however, still ending in positive territory, up by 56 points. As I said,
TSX up
there was some
56
strength in financials, industrials, as well as energy shares today. The materials slightly on the downside.
NASDAQ trying to hold on to its gains.
Rounding out the picture, though, definitely was a choppy session. We saw the Dow down 150 points early in today's trading activity. Then we saw it rally about midday, holding on to those gains at around 3 o'clock, and then pulling back into those closing bells. Now, a couple of the different reasons perhaps as to why
it's a
we
war
saw
in the
market movement.
Told you guys, it's
because
a war.
we had a lot of investors who perhaps looked at the peak to trough, which was 20% to the downside, and stepped in and did a little bit of buying over the past couple of days. Also, we've been hearing that there was a large pension fund that was repositioning or rebalancing their portfolio actually yesterday, and some of that came into today. The other reason, though, for the rally that we've seen, even though the Dow went hold on to those earlier gains, as you can see, with this very choppy session, is perhaps because we had a bit of seller exhaustion. So a lot of different reasons in terms of why we've seen and the markets move higher.
Seller
But clearly, as we
exhaustion.
head into those closing bells, it is a very quiet session. The volumes are light, so it seems as though the bids, the buyers, and the market just perhaps went away.
Yeah,
There
everyone's
weren't
gone.
as many of them today, as we know a lot of people are off this week. So all of that comes into place.
Sneak
You can't read
attacks.
too much into it.
Sneak attacks while everyone's on vacation.
So here we go with the energy sector up by 1.5%. Financial still holding on to some gains. Industrials as well up by close to 1%. So a little bit of some positive movement on the TSX for sure, but we are still greatly underwater on a year-to-date basis. As you can see, those past couple of trading days, we are trying to get some momentum to the upside. But let's round out the picture here a little bit right now and
So it looks like the TSX will finish 2018
wild week.
in the red,
in mixed territory.
underwater for the year.
We're joined from the U.S. from Houston.
So that's a bad year for the Canadian exchange.
Let's talk a little bit about what we did see today. Very volatile once again. Exactly. Volatility was the theme for the weekend, especially
volatility.
Today. The S&P back and forth between
the word of the day is volatility.
I thought we were staging a late in the afternoon comeback, sort of like yesterday, but then we ended up back in the red. Quite interesting here. We saw, if you just take a look at the week here, we saw the worst pre-Christmas day on record, followed by the biggest one-day surge in almost a decade. So just really showing the volatility. And like you pointed out earlier,
when I go to the Dominican, will there be any hot chicks?
In terms of the leaders today, we did have the financial stocks up for most of the day. Fargo, Bank of America.
I'm going with a bunch of my buddies.
And then also the consumer.
I'm going with a bunch of guys.
Overtaking the financials towards the later
I'm not going with girls.
And let's talk about news on Tesla today. What happened there?
There's always a chance that there will be many parties at the
Tesla
villa.
is a very interesting story to watch. We've been really tracking the performance
and lots of entertainment.
Today, after news came out that they've now appointed new board members. Larry Ellison, the co-founder of Oracle, as well as
anything crazy is happening, your boy will bring it to you.
Tesla's board. This follows the SEC demanding.
I promise you guys this: if anything crazy happens in the DR, I'll bring it to you. Not too crazy, but like family show type crazy. Oh my goodness. Oh, we're gonna get it in 2019, man. There's no doubt we're gonna get it. There's absolutely no doubt. You know what we're gonna get. We're gonna go all the way to the top. That's where we're going. It's a destiny.
We did see WTI rise up a little bit after the EIA, the U.S. government, came out with a stockpile report showing U.S. crude stockpiles did decline for a fourth straight week there. So, was a little bit enthusiastic for the bulls there. In terms of the outlook for 2019, though, that's what's really interesting to me. An analyst survey conducted by Bloomberg showed that the average forecast for next year is for Brent to average $70 a barrel. And just to give you some perspective, we're trading around 52 right now.
$70 a barrel.
Increase.
So if you're into oil and gas, might be the time to buy.
Brent averaging $78 a barrel next year. But on the bear side of the spectrum, we have Citigroup coming out and saying, look, U.S. shale growth is going to be strong, and that's going to cap any sort of a rally. Okay, just so we'll leave it there. Thanks so much for joining us.
Interesting.
Thank you. Coming up next, we're going to dig into the details of a wild week on Bay Street and Wall Street. You are watching The Close on BNN Bloomberg.
You are watching The Close on Rich TV Live. So, what a crazy week. Considering we are going into the holidays, I thought it was actually a very good week. We have been able to find a lot of winners this week. And a lot of companies that have been down have bounced back up today. So that's very strong. So, overall, good week. Obviously, the big news with Aphria and Green Growth Brands brought a lot of attention to both Aphria and Green Growth Brands, which I think is great for the industry and for the sector. I don't believe that Aphria is going to accept the deal, and neither will the shareholders. I believe they think it's worth more. So next week will be fun. Monday, the holiday. Monday will be a normal trading day. Tuesday will be a holiday. So Monday will be the last day of trading for 2018. Hopefully we finish off strong in the green. I know that the TSX was green today, and I know the Dow Jones was slightly red. So it's kind of choppy, kind of a mixed bag. But overall, I believe that I'm not in front of my computer, but I believe the cannabis sector did finish in the green, which is fantastic. I love that. So from that perspective, I'm quite happy, quite pleased about the fact that the cannabis sector finished in the green. So I want to wish everybody a happy new year. Have yourself a great long weekend. If you guys have any questions, feel free to message me. Please, guys, if you like this video, smash the like button. Now remember, Rich TV Live is strictly for education and entertainment purposes. We are not licensed advisors. Always do your due diligence. Always do your research before we invest in anything. I'm just like you guys, man. I'm just an average guy trying to do above average things. And I want more. I want more in this life. So I'm willing to work hard to get it. If you want something in life, you got to go and get it. And every day that I do these videos is just me going out there and getting it. Me just trying to reach up, you know, reach for the stars and land on the moon, man. That's all I'm trying to do here. Trying to do some big things. And slowly but surely, we're going to get there. It hasn't happened as fast as I'd like. Maybe some people think it's happening faster than they thought. Maybe I even thought I'd be higher than where I am. Maybe I'm farther than where I thought. But at the end of the day, we are where we are. And I'm okay with that. 18,000 strong. I'm okay with that. What will 2019 have to offer us? I see big things, man. I see big things. 50,000 subscribers? 100,000 subscribers? Some big things are coming, that's for sure. Some big things are coming. So stay tuned. Get your popcorn ready. If you're not winning, remember, you're not watching. This is your boy Rich. From Rich TV Live. Oh! Dropping my phone again on you guys. Man, I just keep dropping my phone on you guys, man.
Derivative of the presidential cycle.
We're gonna just listen, tune in a little bit here.
Four-year low in January, February 2016. So we're rolling out to the 3-year mark. And if you put a band around 4 years, which you know, that the beginning of that band starts towards the middle of 2019, and you measure cycles from low to low. Okay. So presumably the 4-year cycle low is going to hit sometime, maybe starting May through towards the end of next year. You know, they're not always perfect. It could happen even earlier, or it could happen later. But certainly, the cyclical patterns suggest that you know, we should be pretty cautious going forward. And there's lots of fundamental things that I think about that certainly are consistent with that. And I think we could end up having that even if we don't have a recession. So the markets seem to be pointing in the direction of a material slowdown in growth. Right.
So we may not have a recession, but we may have a slowdown.
Quite flat.
This is what this expert is predicting.
You know, it's only a matter of 20 or 30 basis points. Corporate spreads have widened out. They've widened out quite dramatically, but they're only back towards their average. So this is not a major blowout, and it looks really tame compared to 2016. And you've seen some pretty serious damage in parts of the equity market. You've got, you know, there are components of the equity market like the industrials that have been hit very hard, quite a cyclical industry. So we're building in, you know, the broad U.S. markets in early October, the MSCI World Index last January, and a number of other markets between then. We're moving into that window because usually the equity markets lead by anywhere from 2 to 12 months. So we're in that window where a recession may hit. But I'm looking at all these economic indicators. They're really timely ones that tend to be, you know, a little forward-looking.
Which ones, and what are they telling you?
Well, I look at, there's a number of things that are in the index of leading indicators. So you take out the yield curve, you take out the stock market, you get like inventory ratios, new orders from the ISM index. I look at global steel production, for instance. It's pretty timely, and that's an area that's being really hit by trade. And as of October, it was growing pretty nicely. The October numbers on global trade, import and export volumes are pretty good. So I'm not seeing the erosion yet. So
even the Chicago PMI today was
so he's saying he doesn't see recession yet, but it could happen.
Thing out of Richmond the other day, but you know, I'm at the point where I don't pay attention to those so much anymore. They're important if you're really, you know, trading the markets. But the type of work I do for Davis Ray and its clients is more what's the trajectory here. Right. And we're on the, you know, next week is a big week. I find I spend the first 10 days of the month with my economics hat on more often than not, because you get the ISM numbers in the U.S., you get the global PMI numbers, manufacturing and services, and I find, and those are going to be for December. very timely. I looked at those very closely in the first part of December, so I was using November data, and I didn't see any erosion.
What do you think happened then? Why is the stock market saying there's erosion?
Well, I don't know. That's a good question.
Sell-off. It's just a sell-off. People taking profits.
What were we talking
tax
about
sale season, tax loss season, people just taking the profits, taking their losses.
Bullish. Don't worry about trade. It's all going to be great. He'll pivot. Don't worry about interest rates. The Fed isn't going to, the Fed will come to the market's rescue if need be. And economic and earnings growth are going to go on forever. But, you come out of a global slowdown, 2015 into early 16, you have the recovery, growth accelerates nicely.
Yeah, man.
And then it kind of
every day above the ground provides us with an opportunity, man. I agree with you 100%.
Sustainable rates, lower growth rates, and the same thing.
And in every negative situation, a seed of opportunity grows. In every negative situation, a sea of opportunity grows. So when stocks go down, that's actually an opportunity. It's an opportunity to buy cheap. Instead of panicking and worrying about the fact that they're down, think about the fact that that's your time to buy.
The economy, global economy, U.S. economy, than I think many others are. I think it's going to be below consensus in terms of growth rates. But there's this talk about everybody thinks there's going to be a recession in 2020.
Right.
No one's ever been right about, the herd has never been right on a recession.
Right.
So could we have a bear market without a recession? We've had them before.
When was the last time we had that?
98. During the Asian crisis.
1998, we had a bear market without a recession.
Into 98.
Interesting.
Then you had the Russian debt default and long-term capital management. It was very brief, and I think it's real close on the S&P 500 that you got down to minus 20%. But it was it was a 4-year cycle low, and it was pretty ugly. It was really ugly.
Yeah, I remember it. I do.
And so that was one. There's always issues around, and there's lots of issues around now that could cause we're pretty well on the cusp of a bear market if you use the broad U.S. indexes, but other markets are clearly in bear markets.
John, when you take a look at this 4-year cycle, that's the years or the measurement that you're using, some people would say, well, it's maybe a 4-year cycle, but we're in a 12, 16-year bull market. But at the same time, too, nobody wants to lose money or capital depending on where you're at in your stage of life, right?
Absolutely.
That's what it comes down to as well.
You never want to lose money ever.
If we are in a 12 to 16-year bull market, then the 4-year cycle tends to be milder. Okay. If you're in a longer-term bear market, the 4-year cycle is much more unpleasant.
What are we in then?
Well, if you accept that we hit new highs on a broad range of major markets after the sideways movement through 2000 to 2009 and so on, that we're probably it suggests we're in a secular bull market. And the 4-year cycle low, which bear market, would be kind of a normal happenstance. Is it the case that we're not really out of that secular bear because of all the money printing that happened? I don't know.
Yeah.
But what I see happening is we're having a regular shakeout in the market, which is normal. So if you stand back and look at the long term, over the long term, nominal global GDP growth is 4 to 6%. Over the long term has been higher than that, but it's slowing now. And earnings and dividend growth go in line with historical nominal GDP growth, and that gives us pretty good, has given us pretty good long-term returns of equities. And you have all these little wiggles over time that don't matter a hoot if you're a pension fund manager, but if you've got gray hair, they matter a lot more. And I guess the question is the shakeout we're seeing in general enough to liquidate and pay the capital gains tax, which builds in a 35% decline or something. So it's specific to each individual. Now, one thing I would comment on is Jack Bogle had this rule for estimating.
Jack Bogle is?
Jack Bogle's the guy who founded Vanguard and the first index fund.
Yeah.
But he wrote a paper with some other guy quite a number of years ago and said, well, if you want to estimate long-term returns, you take the dividend yield add long-term earnings growth, and the adjustment in the PE ratio. So if the PE ratio is low, it's going to converge, go up over time to some long-term norm. If it's high, it's going to come down. So in January, I did that.
Okay.
So I used 4 to 6% earnings growth because 4 to 6% global nominal GDP growth.
Yeah.
This is for a global index.
Sure.
The dividend yield was 2.3.
Yep.
And you were getting a headwind of -1 to 2% on the PE converging back to some. So you ended up with
6% growth in your stock.
5 to 6%. Yeah, it was
Very interesting strategy he uses to determine if companies are undervalued.
Inflation and fees.
Wow. So you're not making a lot of money from the risk taking then.
No, but now it's 6.5 to 9. Because the dividend yield's up about a quarter point, and the PE ratio is now neutral to positive.
Okay. So in other words, you can buy stock.
Yeah, it's not bad. Like, the last time we talked, you said, what's your favorite asset class? I like cash.
Yeah.
Still like cash a lot, but
cash is
equities
king.
are looking a lot more attractive. Even if
he still likes cash, but he believes that equities are looking more and more attractive right now. So we're finding a bottom, guys.
But we're going to come back and get more
time to buy.
Where to deploy
This is
that
about
cash.
the time to buy. This is about the time to buy.
This is
Okay, guys.
Bloomberg Radio.
Is your boy Rich. Thank you for joining me on my drive here. Literally just pulling up to my crib. And I might come live to you guys later. Depending on what's up. If there's any breaking news, anything to talk about, I might just come live to you guys. Or I might do a video. I'm literally just pulling up to my crib right now. So thank you guys for joining me today. Like I said, once again, I wish you guys a happy new year. Hope you guys are having amazing holidays. Spend time with your loved ones, your friends, your family, your kids. If you don't have any family, then we're your family, you know? Join us. We'll be your family. We'll support you by giving you attention, a place to have a voice, and a place to have some fun and have a family environment, because here at Rich TV Live, we are a family. We're a unit. So thank you guys for everything. I appreciate all the support, and man, without you guys, none of this is possible. It's true. It's true. Without you guys, none of this is possible. Like I said, I'm just an average guy trying to do above average things, and thanks to you, the people, those above average